Hey, what's up, Investment Talk? In today's episode, we're going to learn all about multifamily syndication from an experienced investor and syndicator, the lovely Yana Epps. Stay tuned and don't forget to hit subscribe so you never miss an episode. See you guys right after the intro.
Hey, what you got going on, man?
Yo, Nick, pass, make it slap.
Welcome to another episode of the Investment Talk, the podcast where we dive deep into the world of everything investing, finance, and real estate. I'm your host, Brandyn Armstrong, and today I'm thrilled to have with us the owner of Ask Me Investments, Yana Epps, a seasoned real estate investor and multifamily syndicator with an impressive track record in the industry. Yana, thank you so much for joining us today.
Hi, Brandon. Thank you for having me. You can call me Yana.
Okay. yeah. And I meant to call you Yana. I don't know why I said it on it. But anyway, let's dive right in. Can you tell our listeners a little bit about your journey in real estate and how you got into multifamily syndication?
Absolutely. So first of all, thank you for having me, and I'm happy to tell my story. Hopefully, me sharing my story inspires someone else to get started in real estate. So I feel like getting started in real estate was something that kind of was inspired by my family and the early exposure that I had to real estate. I'm fortunate enough to be a third generation investor. So watching my grandparents own multifamily and single family assets and seeing how it produced income for them and, gave them a certain kind of lifestyle, and also watching my parents flip houses and make money doing that while I was growing up kind of inspired me to think about what I would do as an investor. I didn't know exactly what I wanted to do, but I was more interested in owning rentals. So right around the age of 19 or 20, I started working for a mortgage bank, which is when I really started to learn more about equity and leverage and how it all works. So I had the bright idea of taking some money out of my dad's house to invest in a multifamily unit, actually a duplex. So went ahead with the loan, processed his loan. My dad actually had another plan in the end for the money, but sometimes I think about where we'd be today if he had actually followed my advice and we had started investing in multifamily over 30 years ago almost. So I got my real estate license to help represent some of my relatives in real estate. Like I mentioned, my grandparents and my parents were still in it at the time, and just everyone that I knew in my immediate circle, I wanted to represent them in their transactions. So I went and got my real estate license, all while working a corporate job for AT&T. And I did it on the side. And one thing I will say about being a part-time real estate agent is it's not really going to give you the type of success that you would like to see if you were a full-time agent, right? Real estate agents can make a lot of money, but you have to give it full-time dedication, full-time marketing, full-time energy. Not to say you can't do business, but it's a lot to manage, especially if you have a really hectic and stressful day job. Because what happens is you're spending, 5 days a week working, and then the only 2 days that you would have off, you're showing houses on the weekend, and it's just really time consuming. Right. And it seems like every time I try to jump back in, maybe it was just the wrong time on the market, but most recently when I was working with buyers, at least here in California, we would submit an offer and we'd be up against 80 other offers. And it just seemed like a really challenging time. So I still have a license today, but I don't currently act as a retail sales agent working with buyers and sellers. I'm focused more on investing. So as I mentioned, I got my license. I also was in lending, but I started my investment business about 5 years ago. So that's what I do now. That's what I focus on the most.
Okay. All right, cool. Yeah, that's an incredible journey, Yana. So With over 244 multifamily units under your belt, what do you think sets you apart from other investors in the space?
Well, I think it's one thing to build a portfolio and have a lot of success with rentals for yourself. But I think what sets me apart is the fact that I'm not on this mission alone. I'd like to see everybody around me learn how to do the same thing. So I'm very passionate about teaching multifamily investing. But before you even get to that, I'm very passionate about helping people change their mindset. I mean, obviously, we come from a community where this is not taught, and we don't have the right mindset coming into life sometimes, where we're thinking about acquiring the wrong things that really do nothing for us. And a lot of times it can, now that I've grown and matured, I see a lot of things that I've done in the past that's wasteful and useless with money. But once you really start to understand the utility of money and how it works and how money can make you money, you start to realign your values. So that's what I'm really passionate about teaching. Like I said, I'm not on this mission alone. I like to see everybody have a different relationship with money, maybe get to the point where, first step is like getting out of debt, then potentially saving money, and then investing and getting to the point where you no longer have to trade your time for money. So my business, as I mentioned, my investment business is Connected Capital Partners. I also have Ask Me Investments, which is focused on wholesaling. But Connected Capital Partners is where we teach busy professionals how to create passive income streams through apartment investing. So a lot of people don't know this, but when you drive downtown, you see, all the high rises and large buildings, the commercial buildings. A lot of times those are owned by retail investors just like you and I. So you have a group that goes out and acquires this building, and then they raise private equity from people just like us who work a 9 to 5. And a lot of people don't know that you can be a fractional owner in a large commercial asset for as little as $25,000 sometimes and see the same returns.
Yeah. Okay, cool. So for the listeners who might not be familiar with multifamily syndication, can you explain what it is and why it might be an attractive investment opportunity?
Yeah, so again, it's really the opportunity to buy larger assets and putting our money together, right? Because commercial buildings produce so much more income than residential buildings for the most part. The biggest barrier to entry is usually the price tag. People can't acquire them individually sometimes. So putting our resources together and owning a fraction of something that produces more income is what a syndication is built for. So a lot of times we're aiming to acquire properties that are 200 and 300 units plus because they produce so much income. And in my eyes, the more units, the more diversification, because if you own, a duplex, and you have a tenant move out, you just lost 50% of your income, versus if you have a 300 unit complex, you have a couple tenants move out, it's still a very nominal impact on the overall income of the building. So I think there's strength in numbers. And that's why we put these syndications together. It's really an instrument, a legal tool that protects everybody's interests. You're basically forming an LLC that owns the asset, and you have a certain percentage of ownership in that LLC based on your contribution.
Right. Yeah. So it's like an alternative to getting a loan, right? Or you can even use it to get a loan. So for instance, you could syndicate a full deal, or you could syndicate a down payment on the deal, right?
Well, so typically we're always using regular debt, like regular financing, right? So we're still going to try to get the bank to give us 60 to 70% of the, to finance about 60 to 7% of the project. But the additional 30 to 40% that's left over is the down payment. And that's typically what we're raising. We'd be raising the down payment in addition to any CapEx or, repair budget that we want to come up with, and some reserves even potentially. So we're still going to take the normal route, but I'm glad you mentioned credit, because going back to the benefits, there's a lot of people that want to invest in real estate, but they don't understand real estate enough to feel comfortable. So what we do is we basically vet all these opportunities and provide fully vetted passive income opportunities to busy professionals. So we still recommend that you learn a little bit about what it is that we do, but it saves people time and money because they don't have to go out and research these things, and we've already done all the legwork. Additionally, if you do have bad credit, It's not a factor when you're talking about owning a fraction of a company, owning a fraction of the LLC that owns the asset. The only factor in most of these deals is whether you're an accredited investor or not. And I'll explain what that means. An accredited investor is someone who basically earns $200K a year as an individual, or as a couple, you earn $300K a year or more, or you have $1 million in assets excluding your primary residence. And if you don't meet that criteria, you can't participate in certain deals. But there are other deals out there where you don't have to meet that criteria and you can still get in. So the basis is that we have to have a pre-existing relationship with you in order to invite you into a private offering. But you can still participate, you still see the same returns, and it doesn't cost you any more to participate than anybody else.
Yeah. Okay. Oh, cool. So for the listeners out there, you hear that. If you want to get some good investment opportunities, syndication is a good place to go to. And Yana, I'm sure she either has some or will have some coming up down the line. So make sure you reach out if you want to get some good opportunities from Yana. So your background in corporate sales and marketing, it's clearly been an asset in growing and maintaining vital investor relationships. How do you continue to nurture these relationships, and what advice do you have for other investors looking to build their network?
I spent a lot of time networking, Brandon. I have built a network and a community of people that look to me for resources and guidance. So the way that I nurture the relationships is through adding value through education. I think it's really important to lead with education because people won't do anything that they don't understand. So if I'm constantly teaching and preaching, then eventually people start to feel more comfortable with some of these strategies or just the idea or the concept of investing, because a lot of people just want to hold their nest egg close to the vest, but unfortunately that does nothing for us because we're really protective over money that we work so hard for. And I get that, but knowing that leaving your money sitting in a checking account actually means you're losing money by the day. Once people start to really understand that and see how inflation works and understand investing and keeping up with inflation and just growth in general, then they become, a little bit more apt to do business with me. It doesn't have to be with me. What I do is not for personal gain. I'm really on a mission to just help evangelize financial literacy. But I think to answer your question, giving back through education is what is important to me. And I spend a lot of time doing that. I'm also doing a lot of in-person events to get to know people on a personal level. I have coffee and lunch with people about 3 times a week. So I'm really invested in my partnerships and potential partnerships as well.
Yeah. And I'm glad that you touched up on that point about the people saving money inside of regular checking accounts and things of that nature, because especially in today's society, as you know it, a lot of things aren't stable. Even the dollar bill, I mean, who knows what's going to happen? You see with all the banks crashing and things of that nature, you never know what's going to happen next. So you definitely want to have a diverse portfolio, whether it be investments, from apartments to other different assets that's making money, because you don't want to just depend on one thing right now, because you got to have some type of insurance for it. So
the key is really finding a way to manage your savings and spending habits so that you have more money to invest. Sometimes that's, reducing our expenses or finding a way to make more money, whether it's passively or actively. But like you said, it's all about diversification. I don't only invest in real estate, I invest in other things as well. But real estate just happens to be my favorite because there's so much scientific data behind how to make the right decision. And that's why I lean towards real estate. But I'm also invested in stocks and every other thing you can think of probably.
Yeah. Okay, cool. All right. And so as we wrap up, Yana, what are your future plans in the real estate investment world? And do you have any closing thoughts for our listeners?
Yeah, my future plans are to get to the point where I no longer have to work a corporate job or exchange money for time for money, So getting to the point where I have enough rentals to produce enough passive income is my goal. I'd love to do that in the next 3 to 5 years. But also, like I mentioned, I don't want to do this alone. I like to help other people do the same thing. So I'll be dedicating a lot of my time and energy to doing just that, helping people understand how all this works.
Gotcha. All right, and before we let you go, Yana, can you please let our listeners know where they can find you and get in touch with you?
Yeah, absolutely. So if you're on Facebook, you can find me under Yana Epps, or you can also follow my investment group called Real Estate and Investment Strategies. You can also find me on Instagram at The Real Property Princess, or you can visit my website, connectedcapital.partners, or my wholesaling website, therealpropertyprincess.com.
Okay, cool. All right, well, that's a wrap for this episode of the Investment Talk. Want to give a big thank you to Yana Epps for joining us and sharing her valuable knowledge on multifamily syndication. If you enjoyed this episode, don't forget to subscribe, leave a review, and share with your friends. And until next time, keep learning, keep investing, and keep growing. Signing off on the Investment Talk.
Thanks, Brandon. Bye, everyone.
Thank you. Make sure you like, comment, and subscribe to show support, and stay tuned for the next episode of the Investment Talk.